Okay.
Perfect. So thank you very much, everybody, for coming. I'm not going to try and say the title again of our presentation here without stumbling over the picking up. But we're here to talk today about personal pensions and why they could be worthwhile. So we're going to go through a little bit. First of all, we skipped a slide about who VetYou are. You might be familiar with VetYou already, but if you're not, VetYou is a vet-led community that helps members of the profession to secure their future prosperity in a way that works for them. And like the quote that we've aptly got on here as well, when you don't have cushions around you, you feel the pain much more as you fall. And really, VetYou uses the power of independent financial advisors and partners to try and help you face up to finances and put you in the driving seat of them too. So you can see you can register on the VetYou website as well to be kept up to date with everything too. What is on the menu for us this evening? So we're going to briefly go through this now so you know what's coming up, but you're all here to hear a little bit more about personal pensions anyway. So we're going to do a few quick introductions of who's on the call today, including finding out a little bit more about you too. The way that we roll really here at VetYou is we want to create an open, safe space for you to ask questions. There are no stupid questions. If you're thinking it, somebody else probably is as well. So don't be afraid to say it. Don't be afraid to ask. If you put anything in the chat, when we read those out, we're not going to read your name out with it. You will stay anonymous if you don't want anybody else in the chat to see the questions too. If you just send it direct to either myself, Ebony or Paul, we can make sure that we then field that and you've got that anonymous aspect to that as well. So please don't worry, please do ask. We're going to go through quite a few of the questions that you asked when you were enrolled for this Zoom call, but there is opportunity to keep asking them throughout, and we're going to have a whole section at the end to do that too. We'll be starting with going to Andrew Snowball, who is our fantastic independent financial advisor that you will have met at previous VetYou events. He's going to give us a pension 101, like what is it, how do they work, all the questions that I know that certainly I was too scared to ask, and he's going to make it really simple for us to understand too. Then we're going to move on to our other guests who are a fantastic new, flexible, fully digital pension provider, which is RainDrop. We're going to look at some offers that they've given us and also what VetYou can offer with what Andrew offers in terms of independent financial advisor appointments too. Then we're going to do a live Q&A session. So again, keep noting down the questions that you've got, and we're going to ask you for some participation as we go with some polls as well. So we're going to start off with a poll before we introduce anyone, and this is to get a lie of the land of how are you feeling about pensions right now. So Ebony's going to start us with the first poll, and it is on a scale of 0 to 10, 0 being I am absolutely clueless on what I should do about pension, I have no idea, right up to 10, which is I know what I need to do next. So we're getting quite a few answers that are coming in now. I'll give us just a second. We've got like nearly everybody's voted now. And Ebony, when you're happy to share those results. Super. So we've got the majority of people are at the 1 on the scale, and we've not got any 8, 9s or 10s at the moment. So our hope is that as we move through this event this evening, that we're going to get you feeling a bit more confident in what is the next step for you in particular too. So thank you for that, Ebony. Brilliant. So a quick introduction. Thank you for the poll in there. So who is VetYou? Brief introduction here. Paul, Ebony, Matt and myself, Katie, we're all vets, and you can see we've all come from a wide range of backgrounds, experiences, all brought together with VetYou and the aim to try and help put those in the vet profession, freelancers and professionals back in the driving seat and have that confidence of what products they need and how to secure that future financially too. We've got our fantastic guests this evening. We've got Vivan and Phil, who are both co-founders of RainDrop. And we've got Andrew Snowball, who is our independent financial advisor that works closely with VetYou and will be a familiar face to many of you as well. But that's us. And we want to know a little bit more now about who you are. So our next poll, just for us to get an idea again of who we're speaking to, so it might tailor a little bit about what we're talking about. Are you employed? Are you a freelancer with a limited company? Are you a freelancer without a limited company? Are you a student? Or do you not fit into any of those categories? I can see we've got a bit of a spread at the moment. We've got nearly everybody has taken part now, and we've got just about half of people are employed. Got about 15%, 13% now have a limited company, 10% freelance, and we've got about a third students as well. So a little bit of everybody this evening. Thank you. Super. And yeah, we're going to be answering your questions regardless of which of those that you're actually a part of too. But we do appreciate that everybody in the profession is different. And what we've done is we've created a couple of different characters this evening that you might hear us just keep referencing back to while we're explaining things, just to try and get you to switch on some light bulbs of which of these do I resonate with? Are they like highlighting questions for me that maybe I'd never considered? And most of these are actually made up of a lot of the questions that you were asking when you were signing up as well. So our first character that we've got is James, who is a recent graduate employed vet, knows his company provides a pension, but is unsure whether he needs one himself, a personal pension. He's worried how much he should be putting in monthly, whether he should be putting it into his own pension or he should increase his work contributions, whether it's something to put off for a few years and come back to. And then on the flip side of that, we've got Emma, who is our freelancer. She's an experienced locum vet nurse. She doesn't have a personal pension and she's not sure where to start. She's got quite a variable income and is quite worried about, could she put that much away every month? Does she want to lock herself into putting that much away every month? And she's generally feeling a bit overwhelmed. And I can certainly resonate with Emma myself. I've got a few nods. I think Ebony's nodding there too. She thinks that she probably has a few pensions from other jobs too, but has no idea where to find them. Should she put them all together? How does it all work? So we're hoping that as we go through speaking with Phil and Vivan and Andrew, that we're going to get to grips with what the solutions might be for them, bearing in mind that everybody is different and we want to just provide options for everyone and some tangible tips and steps so that we can get you moving out of those 1s, 2s and 3s and up into the 8s, 9s and 10s this evening. But we're going to hand over now to Andrew, who is an independent financial advisor that, like we said before, works very closely with VetYou. He's going to give us a pension lowdown, the pension 101, on some of these questions that we've got here that came up repeatedly again and again. There is going to be quite a bit of information here, which is going to be super useful, but we have collated it into a PDF as well for you that we'll put a link to, and Ebony will put that in the chat after Andrew's finished talking too, just so that you don't feel like you have to scribble everything down, but please do take notes as you feel necessary. So Andrew, over to you to give us a pension 101. What are pensions? How do they work? And all of those questions that are on here, we will work our way through. Oh, you're muted.
I was so excited I forgot to unmute myself. How about that? So love pensions, think they're really exciting, unlike most people. Don't laugh, Paul. Right, so what I'm going to do this evening is talk about the basics around pensions, okay? It's going to be jargon-free, it's going to be quick, it's going to be punchy. As Katie said, no need to take notes because there'll be a document that you can refer to later. Take notes if you want. It's not a quiz or anything like that.
Andrew, so before you get started, Andrew,
yes.
I forgot, we didn't do this last time, but we did this from the very first live we did. If you think Andrew is talking jargon or you don't understand what he says, call him out, and he's got to donate money to VetLife every time he uses jargon.
Yeah, I'm in. Someone takes scores.
You have full permission to say, what does that stand for? Oh, I don't understand, okay?
Okay, yeah, and just to qualify, I've got to explain it. If I don't explain the jargon, that's when I put the money in, okay? Right, so we're going to start off with talking about what is a pension, how a pension works, what is auto-enrollment, and a little bit about the state pension. Again, it's not going to be lots of detail. It's just to give you understanding and increase your confidence and understanding based on the polls that we did just a moment ago. So what's a pension? Essentially, it's a long-term savings plan which has favourable tax treatment. What do I mean by favourable tax treatment? You get tax relief. What's tax relief? You put money into a pension, let's call it £80. The government gives you £20. Brilliant, fantastic. Can't ask for more than that. It's free money from the government. It's usually taking money off you all the time. You can either set up a pension or your employer can set up a pension, and you can have a bit of both. So you can have your own pension or your employer pension. So that's roughly speaking what a pension is. Okay. So how does it work? I'm focusing on the broadly on the pensions that you all engage with most of the time. So there are other pensions, but I'm not going to talk about those today. So broadly speaking, a pension for you is something that you put money in and it grows, and you have a pot of money at the point when you retire. You use that money to provide you with a retirement income. Now, the size of that pot depends on how much you put in and or your employer, and the performance of the underlying investments. So the investments are the engine within your pension that's going to give you that return. So when you reach your designated retirement age, that can be 60, 65, whatever it is for you, you're entitled to take 25% or up to 25% of your pension as a tax-free income. Whatever's left, referred to as your residual pension, you can draw out, but you're taxed on that. So you're taxed at your highest marginal rate of taxation. So if you're a basic rate taxpayer, you pay basic rate tax. If you're a non-tax rate taxpayer, you don't pay any tax. Currently, you can access your pension from age 55. That's assuming you can access it earlier through ill health, but I'm not talking about that today. But the longer you keep your pension invested, the larger it grows, the greater retirement income and tax-free cash that you're likely to have. So that's what a pension is and how a pension works generally. Next, I'm going to move on to auto enrollment. So why did auto enrollment come around? Well, quite simply, we're just not saving enough for our retirement, whether that's through pensions or whether that's through other products like ISAs. So what the government has now done is put the onus on companies to make sure that you contribute to a pension, which is called auto enrollment. The government has set a minimum contribution level, which is 8% gross. That's made up of 5% of your contributions and 3% from your employer. Of that 5%, it's actually 4% that's deducted from your earnings, and then the government tops up the 1%. So that's the formula that I gave earlier on with the £80 and the additional £20. So you've got to be an eligible employee. Don't worry about that criteria. It's not important at this moment in time. All you do have to be aware of is that, broadly speaking, now when you go into an employer, it's likely that they're going to put you into a pension. Now, the last thing I'm going to talk about is the state pension. So what's the state pension? Essentially, this is a regular income that you'll be provided when you retire by the government. Now, what you actually retire on in terms of the state pension will be based on your national insurance contributions during the life of your employment. Now, to get the full state pension, you have to have at least 35 years of national insurance contributions. And in today's money, the full state pension is, roughly speaking, £175 per week. It's paid every 4 weeks. So it's a little over £9,000 a year at the moment. It's going to continue to increase. So that's what is a pension, how a pension works, auto enrollment, and a little bit about the state pension. I'm going to ask Paul and Katie, have I covered everything on the questions? Are there any additional questions that you'd like me to cover? And I think I've done that in under 5 minutes.
That was very impressive, actually. That was very impressive. We've just had a couple of questions come in. Ebony, do you want to do the chat box ones, or shall I?
Yeah, we've had a really, really interesting anonymous question come in, actually, and they've just clarified a change in what I've put out. It has taken me 20 years qualified to have a dividends draw down from my business of over 32,000 a year. And I've ploughed most of that back into my practice. I don't have a pension. Am I too late at 42?
I'm glad you said that, because on the tips document that we'll also put out, I say start as soon as possible. But the truth of the matter is it's never too late to pay into a pension. Now, clearly, the earlier that you start, the better the benefit you get from it. But from a business perspective, Your pension contributions are an allowable expense from corporation tax. So not only are you paying into your pension for your retirement, you're also reducing your tax liability as well. So in answer to your question, no, you're not too late. It depends when you plan to retire, what you want to retire on, and what other sources of income you've got for your retirement. So something to be really, really clear, retirement or retirement funding is not just about your pension. Your pension is just one element of that, okay? So you have to look at it. I was nearly said something which was a little bit of jargon, so I won't. So you have to look at all your income options for retirement to assess that. If you're not sure, speak to me or speak to the guys at RainDrop, and we'll be able to give you an idea of what you need to do to achieve what your retirement income should be. Sorry, I waffled on a bit on that one.
That was good.
Cool.
I just got a quick question looking back at our avatars, Andrew. If, for example, somebody's got some more money now and they want to put that into their pension, would it be preferable to put that into their work-based pension or to get a personal pension with that? And what sort of rates of income overall should they be aiming for, really?
Okay, good question. So the honest answer is it depends. It depends on what your employer offers and what your situation is and what you really want from your pension. So I'll qualify what I mean by that. So you may be with an employer whereby if you make additional contributions, they'll also match your contributions. If you're in that situation, it kind of makes sense to do that, right? Because it's free money. Okay, so that's one reason. The other one is you may want to have greater control in terms of what you're invested in, and your employer's pension may not allow you access to that. So things like ethical investments, sustainable investments. If you don't have that and you want to have more control, then you set up your own pension. So as I mentioned at the top of the pension basics, there's nothing to stop you from having two sets of pensions. It really depends on the individual. And from a contribution perspective, I would argue that if you do the math and you look at 8% contributions, that's not going to be enough. And you should probably aiming for between 15 to 20% in terms of your contributions, remembering that you're already making 4% yourself, the government's topping up by 1%, and your employer is making up the 3%. So it's not just a brand new 20% or 15% that you're contributing.
And obviously, at the moment, we explain to everyone, Andrew, that with VetYou, they can book a call with you immediately. They can register at vetyou.co.uk and book straight in with you. What would be the path if someone booked in and spoke with yourself as an independent financial advisor with their pension? Like, what would be that process? Because you've, in the top tips, we've got review your pension annually and keep an eye on it. What would that look like, having an IFA involved, people that were watching?
Yeah, so it depends on what stage you're at in terms of your pension planning journey, right? So if it's essentially wanting to know where to start, whether you're going to be using me, whether you're going to be doing it yourself, whether you're going to be using a platform provider like RainDrop, it's understanding what your situation is. So that's what I'll be able to help you to do. It's almost like a financial coach in terms of understanding where you are now, what you want to achieve in the future, and when you want to achieve it. And then me being honest and realistic about what you can actually achieve. I speak to lots of people who say they're going to retire at age 55 and they're 35 and they have no pension savings or other savings at all, right? So unless you're willing to save £1,500, £2,000 a month and go in some really high sort of risk investments, it's unlikely that's going to happen. So I help you get some realism in terms of your objectives, but also I'll let you know that it's achievable, right? As long as you're dedicated to that plan, and I'll help you get that plan.
Thank you, Andrew. Have we got any more questions coming up in the chat?
One quick question that I know Andrew and I know that the RainDrop boys are going to cover as well, but I had this question too. So thank you to the person who asked this. What if the investment goes down rather than going up? If I'm putting my money into this essentially this savings pot, right?
That's good news. That's good news, right? So if you're saving for the long term, there's no real downside, right? There's a mental downside in terms of nobody likes to see their investments go down, right? It's a little bit depressing. However, if you think about it, when you purchase an investment, what you purchase are units. within an investment. Now that's not jargon, right? So you're not charging me any money for that. So let's assume you pay £100 to buy an investment. You get 100 units. Now, if the markets go down, let's say by 50%, your £100 is buying you double the number of units, which is good news, because when the markets recover, as invariably they do, you're doubling up. So you're winning, right? So it's good. We like that. And actually, when you're investing, and this is a little bit jargony, but I'll put the caveat that Phil might explain it in his section. But when you save monthly, what they call it is pound cost averaging, because over the course of ups and downs, you'll be better off because you'll have the periods of the investment going down in value. So bad news is actually good news.
Cool. Thank you, Andrew.
I love that, by the way.
that's explained it, and I think there's lots of stuff coming in on the chat box about that. We'll cover that off at the end. If anyone wants to have a chat with Andrew, he's one of the financial advisors we work very closely with at VetYou, and just he gets the veterinary psyche and the little nuances and just who we are and all the pluses and minuses that we bring to the party. And quite a lot of us in VetYou use Andrew ourselves, so that's a sort of a tick in the box for Andrew there. If you want to get in touch with him, not just to talk about pensions, but income protection, critical illness cover, savings, all the sort of gamut of stuff that you might want to do in terms of finances and securing your future, go onto the VetYou website and you can see his calendar, see what he's up to, see where he is, and book in a call to have a chat with him about that. Thanks, Andrew. Just going to come on to a point that was mentioned while Andrew was having a chat, and I know the RainDrop guys are going to have a chat about it as well, which is ethical investing. It's something that over the last few years has started to rear its head and gets asked and questioned, and people start to worry about it. In the past, we've just thrown our money into the pot, and other people have invested it wherever that is. Then potentially there was a bit of a thought about, in terms of ethical investing, maybe we just want to not invest in bad companies or companies that we dislike. And now it's even gone to the point now where instead of it being a negative, now we're actually positively thinking in terms of ethical investing. Maybe we should, instead of, well, as well as not investing in evil companies, we perhaps want to positively invest in positive companies that are doing some good. And so there's certainly a larger or a growing area within the financial world of people discussing, thinking about, wondering whether ethical investing is something that people want to get involved in. We're just going to run a little poll now just to see what everyone thinks about that.
So yeah, ethical investments. If you had an option of ethical investments, would this be something you would be interested in?
Wow, we've got upwards of 90% of people saying yes so far.
And you might not know either. So yeah, you might not be sure. And again, one could argue, what is ethical? You could get into some, philosophical conversations about this, but as a broad feature of your investment portfolio or pension portfolio, would that be something of interest? So
it's a really difficult one to think about, actually, when you start to get into the nitty gritty. I'm one of my other jobs, I'm a trustee at VetLife, and we were certainly looking at doing ethical investing. But if you say, I don't want to invest in alcohol companies because I feel that that's something I don't want to invest in, but then do you invest in Tesco's because they make a lot of money out of selling alcohol? And then it starts to get more and more confusing. Do I invest in a logistics company because they transport the alcohol? And then, oh my God, it becomes more and more complicated, as most things are in life, the more you look into it and the more you get into the detail. But it's something to be interested in, and perhaps ask the question and hear what the answer is from your financial advisor or from a pension provider, etc., that you want to do your investing in. And like I said, you can steer clear of negatives, and you can actually now start to go towards positives, companies that are doing positive things for that area. Great, thank you for that. Have you shared that, Ebony? Is that
88% saying yes, and 12% saying not sure, and nobody saying no.
I think that's probably, we could have predicted that. I'm not surprised with the sort of audience and the type of people that we that we have. So no, not a surprise there. Great, thank you. I'm now going to introduce our second team of speakers this evening. One of the big issues or problems or concerns perhaps around pensions is often it's that lack of control. It's the fact that I'm giving my money away now and I might not see it for many years, what's happening to it, who's got it, what's happening. And certainly with the advent of, and it's a good thing, I think, but certainly the advent of workplace pensions, we've got very little control. We have very little control in where that money gets invested, how much, who gets it, etc. It's all often just taken away at source before we even get to see it by our employer. And so certainly it was very interesting to see RainDrop, who are they're very flexible, they're an entirely digital platform, which gives you that ability to know where your pension is, know what's going on with it, see what's happening, adjust what you're doing with it. Because I suspect most of us on this call are probably not going to stay in our jobs for the next 30, 40, 50 years. The world of veterinary has become much more flexible. We are doing a lot more of that sort of portfolio career. We're having gaps. We're taking time to be locums, to be freelancers for a period of time. We're having a number of jobs as we go along, maybe having a sabbatical, having time off, etc. And so the idea of just having one employer for 40, 50 years is perhaps not as common as it used to be. And so maybe the finance world has not kept up with how certainly us as professionals are now running our lives. And that's why I wanted to sort of bring in RainDrop, which we feel might be a great option for quite a lot of you if you're thinking that that's more like you. So I'd like to introduce Vivan and Phil to sort of have a chat about RainDrop. Guys.
Thanks a lot, Paul, and thanks a lot, the VetYou team, and thanks for all the participants for joining. Yeah, so we started RainDrop because pensions are, well, they're perceived as daunting and confusing, and well, they're supposed to be simple and easy. And I think Andrew did a really good job of kind of distilling the stigma around pensions and the myth about pensions. So thanks a lot, Andrew. So yeah, I think when you're self-employed and you're freelance, it's even harder to set up a pension because you don't get auto-enrolled into a pension scheme, which is the pillars on which we built RainDrop, because existing solutions out there don't cater to those who have flexible income. So with RainDrop, you can start, stop, pause your contributions. If you work out of a limited company, you can open a pension with us as well. And we've also built an automated tool to help you go and find all those lost pensions. There's some crazy stats about 1.6 million lost pensions in the UK, which totals about 20 billion worth of assets, which is unbelievable when you look at it in the large scheme of things. So yeah, that's the mission and the reason we built RainDrop. And I just want to pass over to my colleague, Phil, who will give a quick demo about the product we built, and we hope you guys enjoy it.
Yeah, thank you, Vivan, and thank you for everyone attending and VetYou. So yeah, as Vivan mentioned, I think the best thing to do is we just wanted to show a little demo of RainDrop itself, try and show you how easy it is to use and how it can hopefully help you overcome some of that jargon. I'm going to stick my neck out and make the same promise that Andrew did about not saying any jargon. I feel like this is my first time trying to do that, so it might be an expensive journey for me, but let's see how we go.
Charity, but it'll be good for charity, so it's okay.
Exactly, 100%. And starting with that as well, we talked a lot about trying to gauge what the right amount to pay into a pension is, and Andrew talked about that. I think one of the overarching statements there as well is that, as he mentioned, it's just getting started. Even if you don't think you can put that much in, just getting £1, £10, and then ramping up, etc., is a great place to build up your confidence with something like a pension. And so as part of that, the first thing that I wanted to sort of show through was a little tool that we built to help people try to understand how much their pension could be worth. So I'm just going to share my screen here, and please do shout if I'm showing the wrong screen or anything. I presume everyone can see what's on my screen.
Yep, all good.
Great, fantastic. So this is completely external to the RainDrop app. It's a free service completely you can use on our website at any time. And it's just a little calculation to help people understand high level what a pension could be worth for them. So we allow you to go and toggle here what your age is right now. So I might be 30, might be earning roughly around £40,000. And, I want to start and see what it would look like if I was contributing, say, 9% of my income, which happens to be around about £300 each month. As we mentioned, we're super flexible. So this is just a back of the envelope calculation. With us, you could be paying in 0 one month and then 500 the next, or whatever, meets your needs. And then you choose what year you want to retire in. As Andrew mentioned, at the moment with a personal pension, you can start drawing out at 55. So we set the lower limit there. But again, you can toggle this and see what the difference might be. And it might maintain your expectations sometimes about trying to retire as early as 55. So on the back of that, you will do a little calculation, and we show you what your pot would be at that age that you've chosen to retire at. What's really important here is we show you, this could be worth 198,000, of which over that time you will have put in 115,000 from saving. But the important part that we talked about, that tax relief and that tax top up, is another 29,000 that comes from the government. And without using any jargon, you can also potentially gain even more from that through your self-assessment if you're a higher rate tax earner. And then on top of that, as Andrew mentioned, you'll be investing that money into some sort of fund or equity, etc. And we can go into explaining why we chose the particular investments we have on our platform and why we think that they make the pension journey much simpler to understand. And given that, your investments could grow by £54,000 here to make your full 198,000 pot. But we understand that this number might not mean much to most people. What's more important is understanding how long that might last you at retirement. So here you can see that if you were to spend £2,000 every month from your pension, in this particular case, having retired at 62, this would only last me till I'm 71, which is a little bit of a scary thought there. This particular one doesn't include the state pension, but you might think, okay, well, maybe I can go down to sort of only spending £1,400 every month, but then, it's only lasting until I'm about 75 in this case. So you might think, well, maybe in that case, maybe I should retire at 65, see what that looks like. Great, now this would last me till I'm 80, but, maybe I need to be more closer to 2000 or something like that. And you can see what it would look like if you contributed a little bit more. So that's the first sort of stepping stone. But I think what's really important to gauge is we have two more sort of quick graphs in this tool. The first one tries to really help you understand the impact of what Andrew mentioned about starting later. So if you were to delay just by 2 years, it would actually impact the value of your pension in this case by about 8% and would last you 1 year less at retirement. Just goes to show how important starting early is. And going back to what we said before about starting with even a small amount, we've even built what we call a little ramping calculation, which says, I can't afford to pay in 300 every month, but what if I start, with £60 and I grow it by £20 every year, so that I start contributing £80 in the second year every month and then £100. Well, at this point, my pension ends up being 148% bigger. So it's really important to show that, you can always you can always help improve the size of your pension by catching up later on. But obviously the earlier you start, the better. So that's just a little tool. We can share the link, I'm sure that you will, to go and play around with this little calculator. But leading on from that, I'll now show you the RainDrop platform. And, if you want to use us or Andrew or whoever it might be, just to give you a sense of the journey and how we try to keep things very, very simple as well. So here I'm showing you the screen of the RainDrop app. This is someone that has just signed up. And this is a journey as if it was on your desktop, but to be clear as well, it's a journey you can do on your mobile as well. We've made it very simple on there as well. So you can start a RainDrop pension with us on your phone. So we start by asking you a few questions. The first thing we need to know is your birthday. And the reason we do this is to go and more accurately project what that pension pot value could be. So I'll just put some random dates in there. The next thing, as Vivan mentioned, is that we cater for both self-employed people, but also directors of a limited company. And also we do cater to the employed. As Andrew has mentioned as well, you will have or you may have a workplace pension, but that doesn't necessarily mean that you can't contribute more to a second private pension, which is effectively what we are on the side. And you may need to help get to that sort of goal that you're looking for. But at the same time, also a solution like us might offer you other investment options that you can't get through your workplace, like the ethical investments that we talked about, which I can talk a little bit about more later. For now, let's just say I'm going forward as a self-employed person and not a director of a limited company. We have a quick question here that's just for us to try and gauge from users about why they want to use us. I'll just go ahead with digital and quick to set up. That's just so that we can keep making this as easy and simple for everyone as we move forward. So we break up the setup of a pension into 4 key steps. The first one, as we mentioned, is that you need to pick an investment, and we'll talk a little bit more of that in a second. The second is you need to choose how much to save each month, and that's where the sort of calculator tool might be of a help to get you to sort of understand what's a right goal for yourself. You'll then go on to digitally create your pension. We just have a few simple questions to verify your identity and make sure you're eligible. And finally, you'll start paying in. So with picking an investment, we just want to emphasize a couple of the benefits of our solution. So as we mentioned, to grow your pension, you need to invest it in something. And we've actually worked with BlackRock, who some of you may or may not know is one of the largest asset managers in the world, which means they obviously have over 30 years of experience, particularly with investments that are specific for pensions. But obviously, given their size as well, they offer very competitive fees, which allows us to keep this platform as low cost as possible. And speaking of that fee, we charge one simple all-in fee of 0.75%. Now, to make sense of that, what that means is that we charge, if you have £10,000 in your account, in your pension, we charge effectively £75 on that a year. If you had £20,000, it would be 150. So it's 0.75% of whatever you have saved with us. And when we mean all in here, what we're trying to get away from is what we've seen from other pension providers who will effectively break out the cost of their pension as well as adding on top the investment costs. So some of these might say that they're 0.5% or 0.45, which looks lower than us. But then depending on the investments that you choose, the all-in cost is very much aligned with us or higher. So it's always good to check that when you're comparing. Some of them say they're transparent, but maybe not as transparent as they seem on the face of it. The other key thing to mention as well is that we're completely secure. So we work with independent third parties who hold your money so that we never actually touch it. And those people hold money for some of the largest institutions in the world. So you know it's independently protected. And it has the same, those institutions are covered by something we call the Financial Services Compensation Scheme, which protects up to £85,000 of investments if anyone in that chain was to, you know, have an incident and go bankrupt or anything like that. Not that anyone has any worries or about that happening to any of the institutions we work with. And finally, we've tried to make things as simple as possible. And I'll talk more about this when we actually show you the investments, but we have a little video as well here. If you click the pop-up to learn more that explains these investments, I won't show you the video right now, but you can go and watch that in your own leisure, in your own time. So picking these investment options now, we talked about having ethical options, and as Emily and Andrew mentioned, we're actually launching them soon on our platform. To your key, I think it's a very interesting question as well. Just from doing the sort of looking back at ethical investments and speaking to every different asset manager and investor, they do have different definitions. One that really struck me was that you look for an environmentally and socially responsible fund, but they might still invest in tobacco because tobacco is not considered in their world to be necessarily under the criteria of not environmentally friendly or social, but is ethical. So there's very subtle different definitions. And I think it's important that for us, it's a very important thing, especially if you're investing in something, you know, to secure your future, you want to make sure that's a future that's worth living in, which is why I think something like ethical or ESG is very important. But for now, we can talk more about those if you have any questions. For now, we just offer what we call our simple retirement options. So I think as someone mentioned or asked in the chat about the level of risk that they should be taking and what that looks like. And obviously that's very personal to every person in terms of what your tolerance is and what you're happy to lose. But we try to move away from that concept a little bit. Instead of basing things on risk, we base them on the year that you want to retire. So we ask, what is that year? And if you say 65 in this case, we show you a couple of options, again, completely managed by BlackRock, that are more necessarily age appropriate for someone in that category. Again, based on your own personal circumstances, something else might be more appropriate for you. But in this particular case, this particular fund here is for someone ideally between 27 and 32. And what that means is the younger you are, this particular fund or investment that BlackRock manages will take more risk, and they will slowly take less risk as you approach retirement for you without you having to do anything. So the whole concept being that the younger you are, as we mentioned before, the longer you have to ride out the ups and downs, and therefore can potentially take more risk and to gain more return. But that as you approach retirement, you should probably be taking or potentially thinking about taking less risk because you can't afford to lose a significant amount of money as you're going to need to draw it down from your pension. So in this case, let's say I picked that particular option. Again, we show you how it's performed over the past. We show you a little bit about the breakdown, but again, there's not something necessarily you need to worry too much about. And then we have some frequently asked questions here. We just emphasize the fact that your money is safe, and the fact that you can change your choice at any point in time, and you can start from as little as £1, given the flexibility. Emphasize how much it costs, as I mentioned before, the £75 a year effective if you had £10,000. And we talk about that age appropriate risk and how these investments work, as I already sort of mentioned there. So given that, you've now picked your investment, and now you're trying to work out how much you should be starting off your pension with. And so we do a little calculation, be very clear on this. This is just, again, to do the same as the pension calculator that we showed before, just to give you a sense of what it could be worth, but you can pause and adjust at any point in time. So we say here, if I pay in 200 each month, my pension could be worth £140,000 at the retirement age of 65. And just to go through this graph, it's very similar to that pie chart we had before. We show you how much you would contribute, how much tax relief you would get back from the government, and how much your investments could grow. The other thing that we do in our aim to be very transparent to people is we show you what we call the impact of inflation. And don't worry if that's a sort of unknown concept to you. I think the best way to explain it is that the price of a loaf of bread, say 20 years ago, was 50p, but today it's £1. And that difference in the cost of living in, say, something as important as the price of bread is basically the cost of inflation. So what we're trying to say here is, look, your pension could be worth, in the orders of £210,000 in this calculation. But because the cost of living has gone up so much by the time you retire, it's like the same as having only £140,000 today. And that's just, you will only buy the same amount of loaves of bread effectively. And then going on from there, as we mentioned, we show you then the same calculations before to see how long that would last you at retirement. So you can see that in this particular scenario, it will only last me until I'm 72, but I could go up and change this to say 400. The other thing, sorry, that I should have shown is that, again, being transparent and, again, understanding that there is always risk with investments, we show you what a pessimistic scenario might look like. So in this case, 161,000, a realistic 280, and an optimistic, in this case, 520,000. So that, you have a sense and understanding that, things can always go down, but hopefully over the longer term, the idea is that it will go up. And obviously you still have that tax relief that you wouldn't get from most other ISAs. So assuming you're happy with that number, we go on to verify your account very quickly. 6 very quick questions. I'll just go through these very quickly as they're administrative. Are you a UK resident for tax purposes? What's your full legal name? In this case, Mr. Philip Fortio. What's my nationality? I'm British. My marital status, I'm single. Now, this is important. Some of these are quite personal questions, but we're very clear that, we need these for setting up a pension with HMRC. They need these bits of information, unfortunately, and it's out of our hands, unfortunately. Same with gender. We're open to diversity and appreciate it, but unfortunately, the government only accepts these 2 options. Then the final sort of barrier, something to be aware of before you come and start your account, is that you'll need to put in a national insurance number. I'll just put in a random one here. I have to put in a valid one as well to make sure I do that. There we go. And finally, we need your address. And the reason we need this information is that we have to go and verify your identity digitally. We pre-populate all of that for you to keep things as simple as possible. And we play back that information so you can confirm that the details you've entered are all correct. This is the point where we do, as every financial institution does, we have to show you all the terms and conditions, help you, make you understand that, there is risks in investments, and you can read through all of these documents now, or you can, read them later on as we make them available to you in your dashboard at all points in time. So assuming you're comfortable with those risks, you click to apply and we move forward. And at this point, we're just verifying your identity digitally in the background. And in this case, I passed automatically. About 85% of our clients, users pass typically first time. Otherwise, you might be asked to upload ID. And then after that, you would move forward to this screen. And again, here, now we're just doing the final step of setting up the payment. Again, we make it very clear, again, on our flexibility that you can stop and start at any time. And that we're completely secure that we use well-established third parties for doing our payments and for holding your money. So once I'm done with that, this is the point where I fill out the last form. So, at this point, I might start with only £20. I can choose to do a one-off as a start, just to test out the platform, or I can do monthly. Simply put in my sort code, account number, And yes, I can change any of the details of my address if my billing address is different to my registered, if I'd like to. Just confirm that I'm authorized to set up this direct debit on that account. And we play back the details, just be very clear of who you're paying to effectively, which is us in this case. Once you confirm all of that, now at this point, we're going and setting up your pension. We're going and setting up your direct debit. We're doing all the back end processes that you don't have to worry about, including setting up your account with that independent third parties means that we can go and collect that tax relief on your behalf and manage it for you, so you don't have to go and worry about doing that. So hopefully once this is all processed, takes a little second. There's a lot of heavy lifting happening in the background. There we go. We've set up our direct debit. And now, conscious of time as well, I'll quickly go through the dashboard here just to show you the most pertinent things. So as you start contributing to your pension, you'll see the value rise here. You'll be able to see the monthly contributions. This is the first one that I put in for £20. And you'll be able to see the investment that you've chosen here and all the details behind it. Now, what's important, just to emphasize our flexibility, if you want to change these monthly contributions, it's as simple as coming in here. If I want to set it to 0, there you go. I've effectively paused my contributions and that's done. Now I'm not investing anything at the moment. Likewise, you can change your investments in here at any point in time, and I won't go through that. The other key thing I think I'd like to emphasize, I think someone mentioned in the chat, is finding old pensions. Now, to show you this, I'm actually gonna have to show you on a live account. So I'll just quickly log into, this is my personal account here. And the reason is just this functionality works here. So if I wanted to find my old pension, just show you this, moving the chat to the side. What it does is it launches our little chatbot assistant. And this little guy runs through a couple of questions to help you go and find your old pensions. So the first thing he asks is, do you have an old statement you can upload? But we completely understand that most people don't, and that's completely fine. Then goes on to ask who the pension provider was, if you know, and again, most people won't, and that's completely fine. And the last thing we will ask here is, is it a personal pension or a workplace? So is it likely that you got this through being auto-enrolled in an old job or one that you might have set up yourself? Most people will probably have old workplaces, as we mentioned before, because they've gone through different jobs or many different jobs before becoming a freelancer, or, still have the old ones at their old jobs. Now, at that point, all we need to know from you is who your old employer was. So let's say it might have been in Barclays. And we need to know roughly what dates, and this doesn't need to be exact, that you worked there. So you might have started in 2017 and you might have finished, say, in March of 2019. So we just put those in. And what we do with that is we go and find out who was providing pensions for that workplace at that time, to go and be able to go and find out where your pension would be or who it's sitting with. All you need to do at this point is consent to us finding your pension details on your behalf, and that's it. We're done. In that point, we will go and manage it in the background, and we will keep you up to date on the progress of transferring and finding it, sorry, there's no commitment to transfer at all. But later on, you can go and find your old pensions. Ooh, that's come up a little bit weird, but you can go and find your old pensions here and transfer them over if you needed to, or if you wanted to, and they'd all be in the same place. And again, you'd see that add up to your pension pot here. So I think that gives a very quick, quick overview. I'm going to stop sharing now and pass back to the lovely VetYou team.
I must say that overview is actually just helpful, even if RainDrop is not for someone, because it actually goes through. And for me, the calculator was like, bam, oh, there's me thinking I need money later. It's like, no, if I want to retire then, it gives me clarity on what I need. And so even if RainDrop is not for someone, watching that process, I think, is really helpful. And as Vivan can definitely account for, I did like a mini squeal, like little happy dance when they found some old pensions and put them into my pot. So when I thought I had 0, I actually had some.
Yeah, I forgot to mention that story as well, that we had. We've had some customers where we found pensions that that customer wasn't even or knew existed, which is absolutely fantastic story, because there's so much going on in the background with those old school pension providers, and they might have shifted to some other provider. We'll end up going through 4 different people, and then we'll end up finding a pension that you weren't even looking for at that time, which I guess is always nice to have that sort of upside. Oh, there's an extra £5,000 I didn't know I had from some time. So it's nice to hear those stories.
Fantastic. Thanks, guys. What we really loved about the RainDrop was just how transparent it was, how everything was just there for you to see how much they were going to charge, what were they going to do for this, and even going down to the point they were explaining why they were asking for bits of data. Why do I want this? Why do I want that? And then the flexibility to turn it off and on as our situations over our career change. I had to, after I met the RainDrop gang, I went to find out how much my personal pension was charging me each year, and it took a long time to find out what that number was. Most of the old-fashioned pension providers are not quick to tell you what's going on there. So thanks, that was really good. What I was thinking we could do now is obviously get Andrew back in full screen as well, and just open it up to the floor and see which questions and see if it's more to RainDrop or more to financial advisors, where those questions, or to both teams, to see what questions have come up. What have we got? Should we start on a couple of the ones that have come in on the chat box over the last 20 minutes?
And I've got a couple of direct message ones as well.
Oh, great. What have we got?
And this one's actually quite an interesting one that's coming. It's quite pertinent and something that I had and I asked this as well. Is there a fee to find and combine these old pensions?
It's RainDrop, I think.
Yeah, sorry, I was just pressing the unmute button. No, so for us, it's a completely free service to go and find your old pensions. If you're transferring a pension into RainDrop or anyone else, you should look at your old pension provider, because they can charge fees on that. That's not a RainDrop thing, unfortunately. Or the platform that you're transferring into is that some older platforms may charge you to transfer in, but for us, it's a completely free service, and to transfer out is completely free as well. So for us, there's no cost on that, and obviously the finding service itself is completely free and commits you to nothing. So even if we found them for you, you don't have to make that decision to go either way at that point.
Awesome, thank you.
Great. And I've got another one here that's coming direct, which I think is actually good for both to answer. Maybe actually Andrew can start with this. Is there a maximum amount that you can pay in 1 year and still get tax relief?
For an ISA?
No, for a pension.
For a pension.
For pension. For your pension, it's the maximum is £40,000, but it depends, because if you earn significantly more than that, there's a function called carry forward, so you could get up to £160,000 into your pension in 1 year. And it's also limited to 100% of your earnings. So it depends on the scenario, but broadly speaking, you've got allowances of how much you can put into a year. So the maximum you're allowed is £40,000 gross, but that's limited to your earnings as well. So if you earn £30,000, you can't put in more than £30,000 personally, but your employer could put in the additional £10,000 in that example.
Yeah, and maybe just add a few to other points as well. I think that's the generic case. Just to be clear on that, on the limited company part as well, as we were talking versus personal. If you're paying from your company, that would be 40,000. But if you're paying in personally, you'll get this tax relief that we mentioned before, that top up. So you'd be contributing probably around 32,000, with the other 8,000 coming from the tax relief component, just to be aware of. And then, yeah, there are some things of where you're a higher rate earner, like a significantly higher rate earner, there's a tapering down of that, but that's quite a significant number. I think the 40,000 is a good benchmark for most people to think about.
Hi, it's Matt here from VetYou as well. And listen, I'm not asking this question just because I'm probably the oldest person on this call, but somebody's direct messaged me and asked, what happens to your pension pot if you happen to pass away before you're able to draw your pension? Maybe it should be me.
So before age 75, it's essentially tax-free to your beneficiaries, and post age 75, it's taxed at your beneficiaries' marginal rate of taxation. There are a few little bits in terms of how you choose your beneficiary and how that's passed on, but broadly speaking, that's how it works.
So you nominate a beneficiary, do you, when you take out?
Yeah. So I imagine that's probably through the process for RainDrop, but generally speaking, if you've got a pension, that's what you do. So you nominate a beneficiary, and it's also held outside of your estate as well. So outside of IHT.
Ooh. Inheritance tax.
Yes.
Oh! That is £5 to VetLife, and that's £5 to VetLife.
I did that on purpose.
There's a really good one here, actually, which I think I'm probably going to fire at Andrew, because it's all about financial planning, I suppose. It's how do I divide my money between ISAs and personal pensions? You know, if I've got money, which do I put it into? You know, and they're basically just asking for some rough guide figures. They do acknowledge that it is a bit personal.
Yeah, I mean, it is really personal. What I would change the question to the difference between the two, roughly speaking, it is to do with access. So if you're saving into your ISA and it's likely that you're going to want access to those funds prior to age 55, then put more into your ISA. But broadly speaking, if you're doing apples for apples, you want to put it all into your pension, right? Because of the tax relief that we talked about. Because if you're going into a stocks and shares ISA and you're investing into a pension, the engine is the same within an ISA or within a pension. But with a pension, you're getting the additional tax relief and perhaps even more tax relief if you're a higher rate taxpayer or an additional rate taxpayer. So what it really boils down to is what level of flexibility do you need with your investment? And we talk about that in previous talks that we've had with VetYou, so I'm not sure if they're recorded, in terms of you're separating your money between an emergency fund, short-term money, medium-term money, and long-term money. And if you have that mindset, that will answer your question. I know I haven't given you a specific split because it really depends on what you're saving for, what your objective is, really. I haven't helped, probably.
No, that I think that answers it nicely, actually. Thank you.
I've got another one. Somebody's direct messaged me. If you've invested in a pension, what happens if the value of that investment drops the day before you want to start drawing on your pension? So
it depends on how much it drops. It depends what you're planning to do with your pension as well. So obviously the valuation of your pension will go down. If you were looking to take a tax-free cash amount, then that level would go down as well. So what I would suggest is, if you're approaching retirement, either through RainDrop's functionality or through a financial advisor, they would have de-risked your investment, which means that it would have been less susceptible to the volatility of a drop in market. So it shouldn't have a huge impact on what you're planning to do. But it really depends on the circumstances at the time. And I should say that my laptop's playing up and I can't see anyone, so I'm not actually sure if you're there.
We're all here. We got you.
Oh, brilliant. Fantastic.
Yep. Awesome. Thank you, Andrew. Ebony and I were just saying we're very aware that we're getting towards the hour for everyone, and we always want to respect your time too. So we were really quickly going to check in and see how this session has positioned us in our 0 to 10, where we're feeling on the confidence rating of what we need to do next. So Ebony's going to put that poll back up again. If you're happy to vote back in there, we're going to do a real quick amount of signposting because RainDrop have got a very kind offer for everyone that's been on this call as well. So we want to make sure they get a chance to explain that. And then maybe afterwards, we might have another couple of minutes for any Q&As that people want to hang around and ask at the end. But wow, look at these results coming in now. We've even got a couple of 10s, guys. Well done.
Yeah, so a nice shift here. Even, you know, there's no one in 1, 2, and 3, and there were last time. We've got some in 4s and 5s, but they may have been people that moved up from the 1 and 2. So if you've moved up 1 or 2 places, that's ace, which is great. And we've got, yeah, loads of 7s, some 8s, and some 10s. So that is awesome.
That's amazing. And honestly, guys, if you've even moved up, like Ebony says, slightly, I'd still, even with that information, I think we've made some huge leaps. So thank you to Phil and Vivan, and also to Andrew as ever. But we've just got a few signposts here for your next steps. It all sounds like from that poll, like you feel quite confident as towards what you need to do next, but just to signpost you here with the slide that we've got up. So remember, you can register at vetyou.co.uk and you can book a call straight away. You'll come to Andrew's Calendly link so you can find out when he's available and when that matches up with your schedule too. RainDrop have got a link for us that we're going to pop in the chat. And in fact, Phil or Vivan, would you like to come on and just tell us a little bit about what you're kindly offering to anyone that's been on this call from VetYou coming towards RainDrop?
Well, there's a link over here, a unique link for people who've attended the webinar. And if you sign up using that link, then we'll add £25 to your pension with RainDrop to get you guys started. So yeah, please use the link so that we can track it and add the money accordingly.
Awesome. Thank you so much for that kind offer. So anyone on here interested in having a demo with RainDrop or interested in signing up, yep, use that link. And as they've kindly said, you'll get a £25 contribution to your pension pot as well, very kindly. Don't forget that VetYou do have the income protection financial circles. And actually, Andrew had a couple of words that he was mentioning to us before about income protection in particular. I don't know if you wanted to just jump on and share that, Andrew, while we're here.
Am I unmuted? Yes,
You're unmuted. You're all
Yeah,
good.
it's just to say that, you know, I've been supporting VetYou now for a couple of years in terms of, and we've really focused on protection, income protection in particular, making sure that community are well protected in terms of you've worked really hard to get where you are, or you're still working really hard. So you want to protect all the effort you've put in protect your future as well. Something that's become more prevalent is me not being able to get protection for people that for vets because of existing conditions that they've either got recently and also with everything that's going on as well. So that's having an impact on the applications, meaning that you can't get cover for 12 months, and with some it's a few years with some providers. So what I would urge you to do is, it's fantastic that you've got on the call and you're thinking about your pension, but you can't fund your pension if you've got no income coming in. So really think about getting yourself protected, protecting all the hard work that you've put in, and making sure that you've got the future that you deserve.
Thank you, Andrew. Absolutely. And like Andrew's just said, it's not just for pensions that you can book in those calls, and Paul's put the link in the chat as well for going to vetyou.co.uk and registering and booking in with Andrew too. As we've gotten here, any students on the call, Ebony and team have been working super hard at putting together the big Student Careers Fair, which is on the 6th of February. It's not far off now, and there's going to be some sessions from some of the people on this call as well to look forward to. And finally, Ebony and I have been jumping on Monday evenings at 7 o'clock, doing Money Mondays and chatting about our own financial journeys and just talking about money as easy as talking about the weather, because we have so many taboos, particularly in Britain, about talking about money. So we're on there busting those down. So please do come and join us, and anything that you'd like us to cover or chat about, let us know as well. So in terms of where you can find us, as ever, you can send us an email, you can jump on the website, you can find us on social media as @VetYou Community, and just a little bit about what we actually cover here. You can see that on screen there too. But I don't know if we've still got a chance for any more questions, if anybody's had to go or if they want to stay on and still ask anything. How are we doing, Ebony?
Yeah, so, you know, hour's up. So what I'll do is I will stop our little our stream. Actually, before we stop the stream, just quickly for the RainDrop crew, just want to shout out your social media handles or anything like that so people can check you out. I think on Facebook, you're My RainDrop UK, I think.
Yep, that's the same on Instagram, and LinkedIn is just RainDrop, the financial services. So.
Great. And if you just click through to that link we've given, that link that links you up with VetYou to RainDrop, then again, the boys will take good care of you, help you personally in a demo if you need that as well. They take on your feedback, which is brilliant, and they'll pop some cash in your pot as well. What I'm going to do is just stop the stream here, and then if we totally understand that people might need to go and have their supper, but we will stay open as we always do a little bit longer, just for people to chew the fat, ask any questions if you need it. And we've got some thanks coming through on the chat as well. So cheers guys, brilliant, clear, focused, practical. Thank you guys, very useful. So that is great. And again, if there's things that didn't make sense, drop us a line. We always want feedback too. We build these sessions from things that you've asked us for. We're always looking to improve. So if you think, oh, I'd love it in this format, or can we do a thing on this theme? We'll do it for you. We'll find the people that we've got on this call and we'll put it on. So do give your feedback as well for that.
And
any more questions, feel free. We will stay on for another 5 minutes.
And I was just going to add again a huge thank you to everybody that's been on here watching, but also to Vivan, Philip, and to Andrew. As ever, we've got so many thanks coming through in the chat. Really, really good. Let's see if we've missed anything question-wise a little bit further up.
I think there was a question about national insurance contributions and receiving a full state pension from Brianna. I think she's still on the call. I think she is.
Let's see if we can find it.
She's not. She's
Or you
no,
can put what we'll do as well is we will put up the recording will be made available to you all. We'll put it into an article that after the back of this, and any of the questions that we haven't answered, we'll go make sure we have answered and keep that in the little summary kind of format, summary blog as well.
Oh, somebody has asked a question saying, what age can you work to and still qualify for maximum state pension? For example, if I'm 30 now and I have to contribute 30 years, can I still be doing so when I'm 60 to get the maximum state pension when I do retire?
Yeah, that was the one. I think that was Brianna. The answer was yes, really, till state pension age. If you don't have enough years, assuming she hasn't ever worked, she doesn't have enough national insurance contributions, you can make that up and make additional contributions.
Cool, thank you.
Awesome. All right then.
That was the only one, I think.
Yeah.
If anyone's got any questions or wants to unmute, turn the video on, dive in now and chat away.
No.
Great question, Matt. I was just looking to see if we got any that people had submitted through Zoom. I think we've covered quite a lot of those already. Obviously, we talked a lot about consolidation of pensions. Someone had said, should I actually put them all in one place? Is there a benefit to putting them all in one place?
Is that me, you, Phil?
I'm happy to take an initial crack at it, and you can probably improve on it from there. I mean, again, it can be a complicated question just in the sense of if different pension providers might offer different investments, so you might not have the ability to, as we said before, invest in ethical with one of them. And therefore, if you wanted to have some ethical investments, you might need to keep it with that particular provider. But generally, what you'll find is that the fees associated with most pensions, and we should have mentioned this as well, our fee does go down at a certain point. So if you've consolidated your pensions, you will typically pay less, because you will pay less on anything above, say, £100,000 as it is in our case. So when your pension gets to that size, our fees go down to 0.56% just on our end, but different providers will be different as well.
Super, thank you.
And there's a question come in here. So as a general rule of thumb, what is an acceptable percentage of your annual salary that you should be invested into a pension? And Andrew's actually just saying, yeah, aim for 15 to 20%.
But Andrew, you that includes, doesn't it, the amount that's perhaps already going in from your employer? Because that always worried me that I was putting some in and I was having to put 15% on top of what I was already doing, and that was like, wow, that's a huge number.
Yeah, you're right. So that's right. So that's the gross amount. So if we're talking about you've got a workplace pension already, we're saying that essentially try and double that. That's a good ballpark, because you would have been paying the 8% gross already. So, but I think that's just a good place to start. I think what's really important, I think Phil said it, and I don't think I can say it enough, start as early as you can, because once it becomes habitual, you don't know the money's going out. And then as you get pay increases, pay rises, bonuses, dedicate a proportion of that to your pension, set up a minimum amount. If you're running a company, then towards the end of your financial year or the tax year, you can make a lump sum, help sort of manage or mitigate your tax liability in the process as well. So it's well worth doing. Focusing on just more broadly for those people who do have a limited company, when it comes to income protection or life insurance, again, if you run that through your company as well, that can also bring down, or will also bring down, should I say, your corporation tax liability as well. So all these things not just protect you now and protect your future, it also benefits you from a tax position as well.
One thing that I'm doing, because I've only just paid off, as I said in the last call, I only just paid off lots of debt and didn't have money to put into a pension. But now I've paid off that debt, rather than me put that money that was going out to pay off my educational funds, etc. I'm just going to redirect it. Then I'm living without it for however long now. I'm just going to redirect it. So I'm just going to think differently about where I'm going to put that cash. And again, Matt makes a really good point. Matt started with 3%. If you starting with a tiny amount, if you think, 15%, what, and that puts you off, then go low and just put something in. And if you review your outgoings and you think, well, actually, I don't need the Disney Plus, the Netflix, and the, Instructor Live, like whatever, you can say, I'll have some of them, but some of them I can actually just take that money out. It goes out of my bank every day, every week or month. I'm going to redirect it. And your future self will thank you for it.
Great point, Ebony.
Yeah, many of us are saving on not having takeaways and coffees and stuff like that at the moment. Try and put some of that away. Take half of it and put some of that away each month.
It's important to have fun now, but it's good to have fun in the future as well.
It actually reminds me of a very interesting quote. There was this little article that came out a long time ago, which was the quickest way to become a millionaire was to take the price of a coffee every day from the age of 17 and put it into a pension. And if you do that, the odds are that you'll have £1 million by the time you retire. And it's just a statement of start small and start early, and you'll get there.
Yeah.
Nice.
Wow.
Might use that.
Yeah, I think that's a very powerful note to end on.
Absolutely.
The big one to worry about is just watch out that the vet world's quite stingy when it comes to benefits, and a lot of people I've chatted to have said, "Oh yeah, I've got a pension. I've got a pension." What they actually, when you quiz them, actually are saying is, "I've got the workplace pension." Now, unfortunately, vet employers, the vet world, you just get the bare minimum, the absolute legal bare minimum, which is good. That's nice. It's not to be sniffed at. But unfortunately, as Andrew was saying, if you do the maths, you will not end up with a really fun-filled retirement if you just stick with the bare minimum. And so try and think of having a private pension or maxing out or increasing the amounts you're giving in your into your employer pension. So just because you've got an employer pension, don't think tick, job done, move on. Just work out. It might not be that fun 70s and 80s otherwise.
Awesome. All right, people. Well, look, it's late. It's time for us to go and get a cup of tea, wind down for a bit before a new day tomorrow. So a huge thank you to everyone who has been on here, and thank you, Katie, as well, for host extraordinaire. And yeah, keep in touch. And it's just lovely to see lots of familiar faces and new faces as well on the call. And you will get access to a recording as well. So don't worry if you're like, I didn't remember the bits. You can have a recording as well.
Awesome.
Great.
Take care, everyone.
Thank you.
Good
Good
evening.
night.
I'm having a glass of wine. Am I